Taking a look at GameStop right now, we have this upward trend support line right here that technically dates back since August of 2020. Came down, bounced off support multiple times. Yes, a small false breakout right here, but after the fact, still came down, bounced off as support. Went up to the upside. This was the January high of 2021, and then after that, we saw horizontal resistance level within that time as well, if you zoom in. But we saw that we spiked up and then got knocked down within the same horizontal resistance level and got spiked up again and got knocked down. Now the question is, what is the play? We were anticipating to pass this downward trend resistance line, which with combination of the upward trend support line, which we ended up passing it a little bit earlier than expected, because expecting end of August, which is pretty much the end of August anyway right now for August 25th. So I ended up passing it, I believe, on August 24th, which was pretty good. And now the thing is, though, the question is it just going to go straight up to the upside to this resistance level, and is it going to break it? Now, in terms of breaking it, that's a little bit of a difficult question for the time being, just because it has to be assessed during that time. But I'm going to show the short positions. I'm going to explain as to why it potentially is going to be going up to that, at least this resistance level. I'm going to mention the resistance level, all that stuff. Hopefully you like the video. Hopefully you find it helpful. If you do, consider dropping a like. It does help with the channel, so thank you so much for that. If you like videos like this or other financial videos that I'm going to be posting in the future, consider subscribing. And quick disclaimer, like always, I'm not a financial advisor, I'm not a professional. Everything I do share with you is just my opinion. It is not advice. So please do your own due diligence and research before buying and selling. Now, if it were to spike up right now to this resistance level, like I've mentioned in the past, I'm going to talk about the resistance levels leading up to it as well, what most likely is going to be the play, what the support level will be as well. But if it were to go straight up right now, the resistance level is going to be anywhere between $335 to $354. The micro play is $335 to $345, and then a little bit of a space of a run up all the way to $354, $355, and potentially knocked out. Now, is it in the clear completely once it passes that level? No, not necessarily. I would say one more important level is a horizontal level at $380, $381, $380, around that range. Once that passes, then you'll have the massive run up. You might get stopped again at that all-time high that we had, 483. Again, like before I've mentioned in the video, I think it went higher from my recollection. I saw it that the price going up higher than that, but technically this is recorded as the true amount. So $483 would be the next limitation after about the $380, something like that. But then plus at the same time, you do have the clean number of $400, so that might be a limitation as well. So be careful around that. But the main milestone to pass is somewhere between the $335, $334 to $345 price point, and including that $354, $355 price point as well. Those are horizontal resistance levels. Now, the reason why it will be going up that high, and then I'm going to get back to the resistance levels leading up to it, and I'm going to account for the support levels as well coming down. First of all, if you look at the short positions, so GameStop right here, statistics, you go to short positions, you can see for floated shares is about 17.05%. It is heavily shorted. It is not an extremely shorted territory, but at the same time, for example, if you look at or on CNBC and all that stuff, like business news and all that stuff, they mentioned that there is naked shorts happening. They didn't specify for what stock, I can't remember exactly, but there is naked shorted stock, naked shorted shares happening, which is shorting without having possession of the shares. And if that's the case, and if they're not reported in shorted positions, sometimes they're not reported, especially for the naked shorted positions, then this could be above 20%. The reason why I mention that is if it's above 20%, it is an extremely shorted territory. Otherwise, it's just heavily shorted, which is what we have right now. This one, based off floated shares and outstanding shares, difference is restricted shares and not restricted shares. So this does not include restricted shares. This does include restricted shares. I tend to look at this just because this is more in play in terms of what is available. But if you want to know, outstanding shares is at 10.818%. And this is as of August 13th, 2021. Now, another reason why is potentially it's going to be going up. Oh, the reason why that's important, by the way, too, obviously, if you know, is the more the stock is shorted, yes, it brings the stock down. But when it comes to the run up and the stock is going up, it forces potential hedge funds or whoever's shorting the stock based on their risk tolerance to repurchase the share back if it goes up in terms of panicking. So if the stock, for example, went up to $400 right now, a lot of hedge funds, you have more of a chance one of the people shorting the stock will panic and buy the stock, and then have the domino effect of if they buy it, they drive up the share price, and then therefore another person who's shorting the stock might decide, because their risk tolerance is limited to a certain amount where they'll buy the stock as well, driving the share price even higher, and so on and so forth. Now, if we look at the 5-year chart right about here, this is actually, let's take a look at the 1-year chart first. The 1-year chart, so if you see right here, this is an MACD line, indicates if it's a bearish or bullish movement. For the time being, it is optimistic. It is in the bullish movement, so it's an instant positive, indicating a potential additional run-up. Now, here's the RSI chart. The RSI right now, for the time being, this indicates if it's overbought or oversold. Right now, it is in the overbought territory, but I would not put that in too much consideration or too much of a concern at the moment, because you could always bounce back up. So you see that drop right there where we're trying to go back down to like go from overbought to like oversold. It could just bounce back up. So, and the thing is, this is the 1-year chart. I want to take a look at the 5-year chart and show the significance of it, because this to me will bear more fruit in terms of what potentially is going to happen. So you can see this upward momentum of the movement overall for the stock, right? If you look at the MACD line right here, yes, it's negative. Yes, it's bearish. It's not optimistic, but it's trying to curve up. The bars are becoming a lighter shade of red, and they're becoming smaller. This, to me, is a great indication of potentially it's going to be crossing over to the positive bullish momentum movement. So once that happens, technically the run-up is underway to the upside. Given how much it's shorted, given how this wind-up's happening, given the support line that we're still above the support line like I mentioned, and also broke through a downward trend resistance line where when we went up to it, got knocked down, went up to it, got knocked down. Yes, after the fact, broke through it, bounced off of support, but even after the fact, when we went underneath it, we went up to it, got knocked down, went up to it, got knocked down multiple times. So it is an actual downward trend resistance line, broke through it, all that stuff. Now, the question is, what are the resistance levels that need to be passed before going up to, for example, $335, $334, or $355, $380, and all that stuff? The resistance level that we need to pass first is between $189 to $226, which I've mentioned multiple times in the past videos. And we saw today that even today, the 226 was technically hard to fully pass, fully pass through. And it was 227 that we hit pretty much, and that's it. So only went up to 227 and got a pullback. And after that, if it were to clear, I'm going to explain what price points are going to be the support level, because my anticipation is it is going to come down a little bit, then bounce off, and then go to the upside. I don't think necessarily it's just going to reverse automatically, which it can, but I don't think automatically. And I'll explain why it's not going to reverse automatic. I'll explain after, once I mention the next price point. So after the $226 price point, you have a resistance level between $237 to $244. Between that price point is a resistance level. Yes, you have more resistance levels after the fact. So for example, I'm assuming, I can't remember right off the bat, but I would assume $285 price point is quite a bit of resistance. Yeah, around 285, maybe, yeah, $280 to $280 price point range. And the psychological clean numbers, like $300 price point, is a resistance level nonetheless. So passing $300 in general will be quite difficult. But I would say the most important is these two right here, 189 to 226, and then 237 to $244 price point range. You could add $280 to $285 price point, and then $290 price point to clean that $300 right off the bat. After $300, I'm pretty confident that it will probably spike up to 326 like we saw before, and then 335. But 326 I think will pass relatively quickly. Now, if it were to come down, and the reason why I think it's going to come down, if you look at right here, this is the 6-month movement MACD line. It's different because the movement always changes based off the chart. So this is the 6-month movement. The other one we looked at was the 5-year movement. And right now, for the time being, the MACD line is in the positive. It is bullish, but it is curving down in anticipation of a drop. So it's probably going to cross over to the negative to be a bearish movement. Plus, it's in overbought territory. So right now, we could be dropping down. Now, the question is, what will we be dropping down to? We could be dropping down to the $189 price point, because that could act as support as well. It doesn't have to act just as resistance. But I think more predominantly what will happen is we'll probably come down to these moving averages to bounce off them, because it coincides with this downward trend resistance line. If that's the case, you're basically going to bounce off somewhere around the price point of essentially almost $165 to $180. If you want to play it by to play it safe, you could bounce off the downward trend resistance line, which is $171, which could act as downward trend support line instead. So around $171, give or take, $170. If you want to bounce off this moving average, is $178. Off these moving averages, around the ballpark of $165 to $167 price point, which coincides with these support lines. So there's a horizontal support level at $177, $176. There's pretty much a good amount of support in general within the $160 to $170 price point. So that could happen once it breaks through $189 and just drops down to $177, $176 overall for the most part. Now, if you're thinking what's going to happen if it just drops down to this upward trend support line right here, which the graph is messing up for the time being, but if it were to drop back down to this upward trend support line, essentially coming back down to this underneath this downward trend resistance line, then you're looking at support around roughly at the $154 price point, $153 price point, depending on when it drops it, because the later it drops it, the higher the low will be. So if it were to drop it, like for example on August 30th, just given a random date, then you're looking at support around the $161 price point, maybe $159, shy of like $159.93. Again, give or take $159, $160, $161 price point, depending on when it comes down. But essentially, the reason why I'm also expecting it to drop down and then bounce back up, we've seen that play happen before, where it spiked up past the resistance level, came back down, and then spiked up. And then almost the same thing past the resistance level right here. And you know it's a well, technically it's debatable because it only had 2 touch points, but you could see this resistance level, it broke through it, then came back down, bounced off the resistance level, and then went up to the upside to this resistance level right about here. So essentially expecting somewhat of the same play. More of a reason why specifically is because this 5-year chart is indicating to me a potential crossover to the upside for bullish momentum movement overall, which is optimistic. Now, does it have to cross over to the positive? Last part, no, it does not have to cross over. What we could have is hypothetically, like in a way where it just continues on the negative and curves back down and not fully crossing over for more additional downside. But because the stock is heavily shorted, I don't necessarily see that happening fully unless if something drastic happens. But keep in mind, nobody knows for sure. Things have to be assessed pretty much in a way, at least week by week for the most part. But just keep researching, just keep looking at stuff, try to find out what you can, look at news, and find out short positions and see if they're updated and they're increasing and all that stuff, and go from there. But hopefully you liked the video. Hopefully you find it helpful. If you did, consider dropping a like. It does help with the channel, so thank you so much for that. Appreciate it. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this or other financial videos or other stock videos that I do post in the future, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching, and I'll see you in the next video. Peace.